Alright, hi everyone. Welcome to today's pre-market live analysis brought to you by IC Markets. I'll be starting very shortly. Just want to make sure all of you can hear me loud and clear and see my screen as well. You should be seeing the first page of my slides, which is IC Markets webinar pre-market live analysis. Hello, testing. Hi everyone. Alright, is this better? In terms of audio, sorry, is this better? Can you guys hear me? Nick, Ren, Graham, yeah. Alright, apologies for that. Alright, apologies for the lack of audio at the beginning. Alright, okay. Sorry, let's quickly go through the disclaimer. Okay, but first of all, thank you everyone for tuning in to today's pre-market live analysis brought to you by IC Markets. Right, so we'll just quickly go through the disclaimer. Do take note that this is marketing communication and does not contain and should not be construed as containing investment advice or investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, do take note of the risk warning that comes with trading forex and CFDs. They carry a high level of risk to your capital and should only trade with money you can afford to lose. Alright, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020 and 2021. Alright, so before we dive into the charts and trading view, we'll take a quick look at some of the key economic events coming up this week. Alright, so first of all, on Monday, 15th of January, it's also Martin Luther Day King. So it's bank holiday in the United States, so in the US. So markets in US are going to be open for the initial part of the day. So for the first half of the US session, most markets are going to be open, but in the second half onwards, so that's probably around about 5 p.m. GMT onwards, that's when we can expect some US markets to close today as well. Hi Nick, yeah, of course, for sure, definitely we'll start off. Usually we do always start off with the analysis on the dollar index, as you rightly say. Obviously that impacts all the other major currency pairs, so for sure. Alright, yeah. Alright, hi Eric, good to see you as well. Alright, yeah, we had Desmond last week as well, and then he's going to be coming up in the next couple of weeks as well. Alright, yeah, definitely, of course, we'll definitely cover the pound, the Aussie. I'm just looking through some of your comments, right? And of course, we'll definitely start off with the dollar index or DXY as well. All right, okay. Right. So we have, so that's Martin Luther Day King on 15th of January. So it's a bank holiday in the United States, where most markets will close after the morning session in the US. All right, do take note of that. So we may have slightly lower than expected trading volume in the second half of the US session, or after lunch US session. We can expect trading volume to drop off. All right, okay. And then on Tuesday, we've got the labor market out of the UK or the United Kingdom, right? So if we see claimant count change, which is index that tracks the number of unemployment benefits in the UK. So if we see a stronger than expected number, this number could potentially be bearish for the pound, right? So do take note of that. We've also got inflation data out of Canada on the 16th of January, 1:30 p.m. We've got Governor Andrew Bailey from the Bank of England speaking as well at 3 p.m. This could potentially be market moving as well. We also have inflation data out of the UK as well, Wednesdays, 17th Jan, 7 a.m. GMT. So the forecast is pointing to further easing inflation at 3.8%. So if we get a figure that's lower than the forecast as well as last month's number, this could potentially be bearish for the pound as well. Then we've also got retail sales data in the US on Wednesday, and then on Thursday, January 18th, we also have employment data out of Australia. So we have employment change and unemployment rate. So if we get an employment change figure that's greater than 15.4 thousand and unemployment rate that maybe remains unchanged at 3.9% or edges lower to 3.8%, this result like that, as what I explained, could potentially function as a bullish catalyst for the Aussie dollar as well. Then we have retail sales out of the UK, 7 a.m. GMT time, and also we have the University of Michigan consumer sentiment data as well. All right, so do take note. These are some of the key economic events coming up this week. All right, yeah, we'll definitely cover gold, US 30, NAS 100, and Germany 40 as well. Cover the indices as well. All right, okay. But of course, we'll start off with the dollar index. Then we'll look at the pound, the Aussie, gold, and then finally we move on over to the indices. All right, great. All right, so as usual, for those who may be new to the pre-market analysis, right, we because we're trying to set up the key resistance and support levels for the week, right? So we're going to be looking at the daily time frame here. All right. So when we do our analysis today, we'll be looking at the daily time frame, so do take note of that. And all right, okay, so here we are on the daily time frame for the dollar index. All right, we are on trading view. So as you can see, since end of October and the start of November, the dollar index started its bearish reversal, right? And you can see here clearly it's been trading in a bearish channel for the last 2.5 months, right? And recently, just middle of last week or early last week, we do see it trying to break out of this bearish channel, right? We can see price is broken above the upper trend line of this bearish channel. However, it's been consolidating between 102.20 and about 102.66 for most parts of last week. So hence we have labeled these two levels here, right? These two respective levels here as a downside confirmation and upside confirmation, right? So what we're looking for, you can see, is price has broken out of this bearish channel, right? But it's been consolidating between 102.14 dot and 102.62, right? So it's sort of been ranging between these two levels, looking for a potential catalyst to drive it in either direction. Hence, we have labeled these two levels as upside confirmation and downside confirmation for this week. So do take note. In terms of trend and price action, the dollar index has broken out of this bearish channel. However, it's been consolidating over the last 3 to 4 days, last 3 to 4 trading days, and we're looking for a sort of confirmation. We're looking for a bullish or bearish confirmation, and how we're going to do that. So should price break above 102.62, that should give us a bullish confirmation for further rise towards 103. And if price breaks underneath 102.14, we're looking for bearish. This level is going to help us indicate a potential bearish indication move for the dollar index, right? Okay, so in terms of support, right, we can see that this price level here on 28 December, right, price bouncing off 100.80 is a very significant swing low, right? We can clearly see this is a very strong move, right? This is a very significant swing low here, as highlighted by my brush. Hence, we have highlighted 100.80 as the first support, right? So do take note. So if the bearish confirmation or downside confirmation occurs with price breaking underneath 102.14, right, do take note, it could potentially fall all the way down to 101, which is the swing low support here, and which was also previously the lower trend line of the bearish channel. Similarly, should price break above 102.62, it could run into resistance at 103.20. Why is that the case? Because we do see price bouncing off this level on 7 December last year, right? You can see price making a pretty decent swing low here over a couple of days, and as well on 5th of January, price coming quite close to this level before retreating and dropping. So this creates an overlap level here. So potentially, if we do get the bullish confirmation or upside confirmation here, price could potentially run into resistance around 103.20. Right, we've also used a Fibonacci retracement, right? So you can see here this retracement started from this swing high here on 8th of December, right, ending with the swing low here on the 28th of December. Then we can see that where price is currently trading around, right, where price currently closed, last week, it's a level that's pretty close, that aligns quite well with the 50% Fibonacci retracement as well, right? Let's see where the 61% lies, right? So we can see, okay, I'm just going to put 50 and 61 here, right? We can see that price has run into resistance around the 50% Fibonacci retracement, as well as this upside confirmation, right, which is another overlap level, right? So we can see price making a very significant swing bounce here on 29th of November, bouncing off 102.60 pretty strongly. Then when price broke underneath it, it found resistance here on the 18th of December and 19th before dropping lower, right? So this price action creates a significant overlap level, which is a resistance level that aligns slightly above, or rather in between, the 50 and 61.8% Fibonacci retracement. Alright, perhaps let's see, there's another retracement. We can try and see there's another retracement from this swing high here, 1st November, and ending with the swing low on the 28th. Let's see if there's any other levels that align well with some of the resistance that we have identified. Right, we do see that the 38%, right, we do see the 38% aligns pretty well with the intermediate resistance at 103.21. Alright, so we'll keep that on as well. All right, hi Guanya. Okay, yeah, sure. We'll cover Bitcoin and Ethereum as well after we go through the indices. All right, hi Jamilu, good to see you as well. Right, so do take note. For the dollar index, right, price has broken out of this bearish channel here, as you can see, as highlighted over here, right? Early last week, price has broken out of this bearish channel, but it has been trading within this range of 102.14.102.62 over the last 4 or 5 trading days. And what we're looking for is a potential bullish or bearish confirmation should price break above 102.62 or break under 102.14 respectively. All right, so do take note of that. We may have some of the economic data perhaps on Tuesday that would provide some sort of catalyst for the dollar index, right? Okay, so then okay, we'll cover we'll look at pound, and then we'll go on to Aussie as well. Yes, hi Fabio. Yes, yeah, pretty choppy range as well. So you could also potentially play the range, right? If you don't get the breakout, if you don't get the upside confirmation or downside confirmation, you could potentially play the range as well, right? So should price come up to about 102.60 and fail to break above it, you can play the range and potentially open a short position should price fail to break above 102.60 and target the bottom of the range at about 102.20. Conversely, should price fall towards 102.15 and fail to break underneath it, you can potentially open a long position at about 102.20 and then target about 102.50 to 102.60 as a potential take profit zone for the upside. So you can also play the range as well should we not get the bullish or bearish confirmation. As you can see, there's no real direction for the dollar index since Tuesday last week. All right, let's move on to the pound. Right, okay, so we can see quite clearly for the pound, British pound, US dollar, right? So since end of October, it's been in a pretty strong uptrend, right? You can see this bullish move here over the last 2.5 months, right? Price going as high as 1.2835, and we do see this level here at 1.28, right? Roughly at 1.28 as a potential, as a major significant resistance. Why do we say that? Right, we can see price bouncing off this level here on 24th of July, 27th of July before finally breaking under. And of course running into resistance around 8th of August, 22nd of August as well. And very clearly here as well recently on 14th December and of course on 28th of December as well. So you can see multiple instances where price has reacted off 1.2797 or pretty much 1.28 several times. Hence, we have identified this level as a significant overlap level, which is why we've set it as the first resistance. All right, so that's how we've identified the first resistance. And also the second resistance here is a pullback level, right? You can see price running into resistance around 1.2965 back in end of July before dropping lower, right? And this pullback resistance level here also we also do see a 78.6% Fibonacci retracement aligned slightly underneath this second resistance. So that's how we've identified or that's why we've used this pullback level here as the second resistance, right? So these are the key resistance levels for the pound, right? So do take note, if price can break above 1.28, then what could potentially drive the pound above? So like I said, we've got tomorrow, right, Tuesday 16th of Jan at 7 a.m. GMT time, we've got claimant count change and average earnings index as well as the unemployment rate. So these are basically labor market data, right? So unemployment claims or claimant count change is a metric that measures the number of unemployment claims in the UK. So if we get, right, a number that is weaker than 18,000, right? And we also see strong earnings, right? Average earnings index. So if we get a figure that's maybe greater than the estimate of 6.9% and lower claimant count change, and as well as lower unemployment rate, there's all these three could potentially function as a bullish catalyst for the pound, and that's what could potentially cause it to finally break above 1.28. All right, so do take note of that. All right. Okay. Right. Hi, Nick. I wouldn't say markets are generally sluggish after the holiday. Definitely, I guess on the first 1 or 2 trading days of January, maybe a bit sluggish, but there has been pretty decent move. Although the dollar index was trading pretty much in a range for most parts of last week. Right, it was bounded by 102.14 and 102.62 roughly, right? But although you could see that the I wouldn't say it's very sluggish, the average true range for each trading day has been pretty wide, right? Even if when we look at the pound, right, we can see that since January actually it's been in a pretty strong uptrend as well, right? With with markets opening on Monday and Tuesday, right, we saw actually the pound pull back quite strongly on the first day before finding support around 1.2610 before moving higher. All right, I wouldn't say they're exactly sluggish, but we were going to look, well, we've got the FOMC meeting coming up as well at the end of Jan, I believe, right? And we've got key economic data coming in as well, so yes, things could definitely pick up from this point onwards as well. Yeah, that's right. All right, yeah, Fabio. Yeah, that's especially for the first week of January, right, where most traders from institutional companies could probably still be on holidays, right? And then that's when and we may see them all return the second week of January onwards. All right, okay, so with that, let's look at the pound, right? As I mentioned, combination of a stronger labor market report coming out tomorrow could potentially drive the pound higher above 1.28, which is the key resistance level, as I mentioned here. And to the upside, we've mentioned this pullback resistance level here at 1.2942 as well. All right, we can also see a strong ascending trend line here, right? We can see price bouncing off this level on 10th of November, coming close to this level here on 2nd of Jan, and of course bouncing off this level once more on the 5th of Jan as well, bouncing off this trend line, right? So we can see that this trend line here is a pretty strong ascending trend line, right? And we can also see that we've got a pretty decent support level at 1.2610, right? We see price finding support here on 30th of November, and after breaking lower, it failed to break above this level in 11th of December, and when it finally did, you can see it found support again on 18th December, 21st December, 2nd Jan, and 5th Jan before bouncing higher, right? So we can see pretty clearly, especially in over the last 2 to 3 weeks, that 1.2610 has been a pretty strong support level, and we also have the intersection with the ascending trend line as well to mark or to help us identify a strong support zone for price for the pound here, right? So do take note, we've identified 1.2609 as an intermediate support that's also bounded by this the intersection of the ascending trend line, and the first major support is this overlap level here at 1.2495, right? We can see price running into strong resistance here on 15th November, and then after breaking above it, finding support on 22nd November as well as on 8th December, 12th December, 13th December before bouncing higher. So clearly again, we can see that price has reacted off this level several times, and it's also we also see the 38.2% Fibonacci retracement aligned quite close to this zone, so we have a pretty strong support zone between 1.2495 and 1.2525, right? We've run a Fibonacci retracement, right, starting from this swing low here on the 4th of October, ending with the swing high here on the 28th. We see that the 38.2% aligns quite close to this support zone. Second support at 1.2379 is another strong overlap as well, and we can see price making this significant swing high here on 6th of November, and after that making this pretty strong bounce here on 16 November as well, so creating this significant overlap. So this is going to potentially function as a strong overlap support at 1.2379. Alright, so do take note of that. Okay, then we'll go down to Aussie. Right, we'll cover Aussie after this. Then we'll look at, let me see what were the comments. We did pound, Aussie, and of course, yeah, then we'll go on to gold, and we'll cover the indices as well. Alright, okay, so let's look at the Aussie. Right, so do take note, one of the key economic events coming up for the Aussie would be their employment report as well. So this is coming up on January the 18th, 12:30 a.m. GMT time. We got employment change and unemployment rate number. So employment change is basically the Australian equivalent of the NFPs, right? We can see that the previous month's figure was about 61,000. The forecast for December is quite low at 15,000, so perhaps that's indicating a potential slowdown in the labor market. And we see the unemployment rate, the forecast for the unemployment rate coming at 3.9%, right? So if you get a strong employment change figure and a lower unemployment rate, this could potentially provide a boost for the Aussie. Conversely, if you see unemployment change slowing down, right, coming in perhaps lower than the forecast of 15,000, and we see the unemployment rate edging higher, maybe to about 4%, this could potentially function as a bearish catalyst for the Aussie, and which could be the trigger that could cause the Aussie to break under this downside confirmation at 66.69, right? So this is a key level here. Why do we say that? Because we see price running into resistance here on 29th of November, then again on 5th December, right? And then after price broke above it, we can see on 8th of Jan, sorry, is it 8th or 5th? This is, yeah, sorry, 5th of Jan, price finding support around this level, and then once again on 11th of Jan as well, right? So we've highlighted it as a support zone rather than an absolute level, right? You can see that this support zone between 66.40 and 66.69, sorry, is a strong support zone for the Aussie, as well as having the 38.2% Fibonacci retracement around this zone. So this retracement, we started this retracement from the swing low here on 26th of January, ending with the swing high here on the 28th, right? So we do see a strong support zone, and we also have the ascending trend line as well, right? We have an ascending trend line here that's been going on over the last 2 weeks, right? When we look at this, we see price bouncing off this ascending trend line on 10th of November, coming very close to this level once again on mid-December, and of course, right, we see price bouncing on this level of 5th of Jan as well as the 11th of Jan last week, right? So we can also clearly see price has bounced off the ascending trend line several times. So we actually have a strong intersection, right? We have a strong intersection here that consists of the ascending trend line, this overlap support level at at 66.69, as well as the 38.2% Fibonacci retracement, right? So do take note, this is a pretty significant support zone for the Aussie, and what could potentially cause it to break below this level would be weaker than expected employment report, right? Okay, so the first support has been identified at 65.26. As you can see, when we zoom out a bit and look in August, right, at the start of August, as price fell or price dropped very strongly towards the end of July, early August, it found pretty strong support here at 65.35, right, bouncing off this level on 3rd of August, then again on 8th of August, roughly bouncing off this level again before dropping lower, then running into resistance here 15 August, 30th of August, 1st September, coming quite close again to this level on 20th of September. So you can see multiple instances where price has reacted off this level, right? Then also clearly price making a very significant swing high here on 3rd of November, and another significant swing high on 15th before bouncing up right, and then we got support here on 22nd of November and the 7th of December as well. So clearly, once again, a level where price has reacted off several times, hence we will use it to identify our first support, right? So this is a pretty significant overlap support for the Aussie. Let's see if there's any other Fibonacci levels that align quite well. No, not really. We don't really see any of the other levels align apart from 38 here, so we'll just keep 38%. All right, okay, so this is what we have for the Aussie, right? And on the upside, you can see this is a multi-swing high or overlap resistance level at 68.88, right? We can see price making this pretty significant swing high here on 13th of December, and as price broke above it, finding strong support on 19th of Jan, and then again on 6th of February as well, right? Let me just adjust the chart a little bit so we can clearly see, right? So we can see price bouncing off 68.89 quite strongly, and then once price broke underneath it again, we see price making a multi-swing high here, which the first one taking place on 16th of June, and then the second swing high taking place on 17th of July, right? And you can even argue that on end of December, 27th December, price came very close to this level again, making another swing high. So you can see once again price reacting strongly off 68.89, and that's how we've identified the first resistance. And similarly for the second resistance is just simply right, we don't see any other major level, but we do see a significant swing high here, right, at 71.45, potentially where there could be resistance again, maybe slightly lower should price break above 68.69. This region here, we may see price stalling around here at about 70 cents, right? We see price making a pretty decent pullback resistance level here before dropping lower, right? So should price bounce off this strong support zone and move higher, it could run into resistance, strong resistance here around 68.70, right? Do take note of that. Okay, so this is what we have for the Aussie. Then we'll cover gold after this, right? And then we'll go and take a look at the indices. All right, so let's look at gold. So XAU USD is the instrument that tracks spot prices for gold, right? So we could say that since October, we can see gold has bounced pretty strongly. Maybe there's a case for an ascending trend line, perhaps. Yeah, and there might be, if we start from this swing low here, there's a pretty decent ascending trend line. But if I start from here, 13 November, we can clearly see that price has bounced off this ascending trend line a couple of times, right? So let's just put this here as well, right? You can see price making a strong bounce here on 13th November, another strong bounce here on the 12th, and again on the 10th as well. So there is a pretty decent ascending trend line here as well for gold starting from mid-November, right? Okay, then let's just start off with the support, right? So first support is at 2019.54. Let me see right here. So you can see price making a small pullback here, finding support here on 18th of December before bouncing higher, and then finding support as it fell back. It found support at this level on 8th of Jan as well as 11th of Jan before moving up again, right? So this level here also aligns quite well with the 61.8% Fibonacci retracement. So we started this retracement here from this swing low on the 13th of December, ending with the swing high on the 28th, right? We do see the 61.8% retracement level align quite well with the pullback support level at 2019.54. So that's how we've identified the first support. And of course, we can see the intersection of the ascending trend line, the pullback support, as well as the 61.8% Fibonacci retracement, right? We do see a strong intersection at this point here. For the second support is a strong overlap, right? It's a strong overlap level. Why do I say that? Right, if you look here, when price pulled back in towards the end of April, it found support here over several days before moving higher. Then as it dropped underneath it, you can clearly see it runs into resistance towards the end of May, early June. Oops, hang on, where's my brush? Alright, see, finding support here for several days towards the end of April, then running into resistance at the end of May, early June, resistance again 20th of July, 28th of July, right? So you see multiple instances where price has run into resistance and support. Then similarly here, price finding running the resistance again briefly here towards the end of October, then early November finding support, and you can see this is a very significant swing bounce here that occurred on 12th of December as well, right? So once again, a very clear price action off this level at 1980.10, right? And also we have another strong intersection here, right? We have the intersection of the ascending trend line as well as overlap level at 1980 to help us identify the second support. And this level here also aligns very well with the 50% Fibonacci retracement. So we started this retracement from this swing low here on 6th of October, going up to the swing high here on the 4th of December. We can see that the 50% retracement aligns very well with the second support. Right, similarly, alright, hi Karim, you got a question on how to explain Fibonacci levels, right? If you do go to IC Markets YouTube page, right, do look at, there has been a webinar series on the Fibonacci retracements and extensions. So yeah, do head on over to the YouTube website for IC Markets after this webinar, and you should be able to find that webinar series, right? Okay, let me see. All right, where was I? Okay, then with regards to resistance, we have also used a Fibonacci retracement, right? Starting from this swing high, 4th of December, going down to this swing low on the 13th. Right, so we can see that price has come quite close to the 61.8% Fibonacci retracement, running into resistance here on 28th of December. And when we look across this price level, going all the way back to what is this, August of 2020, right, we can see two significant swing highs taking place across this level, right? So previously this was a very significant resistance level for gold, right? You can see price making a very significant swing high here on 7th of August, right? This is a very significant swing high here, 7th of August, right? And price making another significant swing high here on 8th of March 2022, right? So when you zoom out and look at price action on a daily or perhaps weekly time frame, we can sort of appreciate what a strong significant resistance level this was at 2075, right? Previously this was a very significant resistance at 2075, which of course, and you can also even argue here on 4th of May, right, price running into resistance here last year as well, right? But of course now price has clearly tested this level, right, especially on 4th of December, right? Price, although the candle did not close, if you look at the daily candle, right, the candle did not close above this level, but we actually did see price break above this quite strongly, right? This is the first time in since, I would say, right, August of 2020 that price has broken above this level here. So that clearly highlights what a significant resistance level this is at 2075. And of course the second resistance is identified at 2150, which is the top of this wick here. All right, so do take note, should we see the dollar index drop lower, right, especially if we get the downside confirmation for the dollar index, that would also mean that we are likely to see gold prices rise towards 2075 once more, right? Do take note, gold prices generally have an inverse relationship with the value of the dollar index, right? So that means if dollar index is going higher, gold prices should generally be falling. Conversely, if gold prices are going higher, if dollar index is going higher, dollar index is falling, generally we should see gold prices move higher as well. All right, so do take note, these are the key levels for gold. All right, then with that we'll cover the indices as well. All right, so we've covered the pound, we've covered the Aussie dollar index, gold, and then now we look at US 30, Nasdaq, and Germany 40. All right, okay, so US 30, I'll be using the instrument here on DJ30 to do the analysis for US 30s, which is basically the instrument that tracks the Dow Jones futures. All right, okay, so this is the US index, and when we look at it on a daily time frame, the Dow Jones or US 30 is trading very close to an all-time high, right? The all-time high is about 37,800. And if we look on the monthly chart, right, so I'm on a monthly chart now, so you can see clearly price has made new all-time highs in December and January as well, right? So with that, now that we know price is trading very close to an all-time high, so then naturally we will of course the first resistance is going to be at 37,814, right? With regards to, let me see, okay, with regards to first support, right, price making a significant swing high here, right? Price making a very significant swing high here on 5th of Jan 2022. So what was previously a strong resistance level now could potentially function as a support. So that's why we've identified 36,955 as the first support level. And then when we look down lower below, price making a swing high resistance here on 8th of Feb 2022, and another swing high resistance here on 26th of July last year, right? So this was also previously a strong resistance level, which could now potentially function as the next support level at 35,830, which is also aligns quite close to the 38.2% Fibonacci retracement, right? We do see the 38.2% Fibonacci retracement here, right? So we started this retracement from this swing low on 27th of October and ending with the swing high here on the 2nd of Jan, right? Okay, with regards to the second resistance, let's see how can we try and attempt to find it. Oh yes, okay. Right, as I mentioned, price is trading close to the first resistance, right, which is an all-time high. So how do we try and identify a potential second resistance should price break above it? We've used I've used a Fibonacci projection. So this projection tool involves 3 points. Hang on, let me get this right. Okay, so the starting point here is on 20th of March. Second point is this swing high here in Jan of 2022 and ending with a swing low here on 27, right? So we're trying to use this projection level to help us identify a potential next resistance for Dow Jones 30. But you can see this projection is pretty high up. It's pretty high up. It's quite difficult to try and identify another support or resistance level, where perhaps the next level will probably be around 39,000, right? Looking at whole numbers here. And also we've done a Fibonacci extension. So this extension is done by using the retracement tool. So we started this retracement. Let me tidy this up a bit. So we started this retracement here. Right, we started this retracement here on 27th of July, ending here on 27th October. We can see that this 161.8% Fibonacci extension was used to help us identify the first resistance. So we can see price running into this level here and failed to break above it. So this extension level had helped us to identify a major resistance level for the Dow Jones here. So do take note, after making this strong bounce here since 1st of November, so about 2.5 months of a strong move, we could see price consolidate between the first support and first resistance, and should should we get further neutral or dovish statements from the Federal Reserve, right? If you see more talks of rate cuts, and we also see the value of the US dollar, and we see treasury bond yields continuing to fall, this could provide a supportive environment for equity markets. So then we could that could potentially cause Dow Jones, for example, to break above the first resistance. All right. Okay. Let me see anything else for Dow Jones. No, take note. No, second support. Yeah, so we're 38.2%. First resistance here. The next resistance probably I would also, because clearly the second resistance identified by the projections is simply too high. Perhaps I would also just use 39,000 as a whole number, right, to identify the second resistance level should price break above this, right? So should price break above the all-time high at 37,800, then of course we don't really have any other Fibonacci levels that we can use to identify. So something perhaps to identify a level that's a little closer, I would probably just use the whole number here at 39,000. All right, okay, let's look at Germany 40. What else was there? Just let me think if I'm not missing. Oh yeah, let's do NAS 100 as well. Sorry, let's do NAS 100. So NAS 100 here is, so the instrument that tracks NAS 100, the one that I'm using here is US 100. So this is tracking the Nasdaq 100 futures. All right, let's do it. Start this with a clean slate. So let's just remove these levels here. So once again, we're looking at the daily time frame. So just like the Dow Jones, if you look on the monthly time frame, right, we can see price is trading close to a previous all-time high, or now it's trading to an all-time high. Previously, this level here about 16,700, you can see price making a very significant swing high here, right? This was previously a very strong resistance level, which now price is broken above it. So of course the all new resistance is going to be at about 17,000, right, which is where price traded close to at the new all-time high. Okay, so let's switch on over to the daily time frame and like tidy up the charts as well. So of course, first major resistance for Nasdaq is going to be here 16,977. So let's identify this as the first support, first resistance, pardon me. We also see price reacting off 16,166, right? We do see a pretty decent case for overlap support level here, so that's what we're going to use to identify the first support. If you zoom out a little bit, do we see any can we reference any other level? No. Okay, probably not. And then the next support level for, it's not the best, but next is not the best overlap, but you can see what I'm trying to get at, right? We can see price running into resistance at 15,794 on 19th of July, then again on 1st of August, finding a little bit of resistance again on 16th November, and then of course after breaking above it, finding support in early December as well, right? So we can see several times where price has reacted off 15,794, which is why I would like to identify this as the second support. We can of course also do a Fibonacci retracement. We will start from this swing low here on 26th of October, going up to the all-time high here on 28th December. We can also see that 38.2% aligns very well with the second support. Is there even a 23 perhaps? Yeah, I guess we can use the 23 as well. So we'll use a 23 and 38% Fibonacci retracement to as supporting factors for the first and second support, right? Okay, how could we potentially identify this next resistance level, right? Perhaps we can run a Fibonacci retracement from here, 19th July down to 26 October. Let's see if we can use any of the extension levels. So 127 and 161 are the key extension levels. So we can see, all right, we can use 161. Right, so this is a pretty strong support zone, strong resistance zone for NAS 100. right? What else? Perhaps we may need to use a Fibonacci projection. So let's start this projection here. Point 1, 26 October. Point 2 is the all-time high, 20 December, ending with point 3 here on 5th of Jan. Perhaps we can, because like I said, just similarly to the Dow Jones, Nasdaq 100 as well is trading close to an all-time high. It's kind of hard to identify any other major resistance, so perhaps we have to use this Fibonacci projection here to help us identify the second resistance at 17,970. All right, okay. All right, hi Eric. Okay, right. Okay, I'll take note of your feedback. Because we do rotate through the education series, so I'm quite sure that we may have the Fibonacci series coming up again. Right, okay, so do let me check with the team and see when the next series will be running again for Fibonacci. All right, okay. All right, so let me see what else we had. Alright, okay, so do take note, these are the key levels for the Nasdaq 100 or US 100, right? Similarly, if we continue to see the value of the US dollar fall, and we also see US Treasury bond yields continuing to fall, this could provide a very supportive environment for equity prices, so that a scenario like that would potentially drive Nasdaq higher. And also do take note, we have US earnings seasons starting as well. We've had the banks announce starting to make their Q4 earnings results. So we also will see big tech making their announcements, the Magnificent Seven. So earnings would also be another potential catalyst for equity markets if we get strong Q4 earnings results, as well as good forward guidance or positive forward guidance for Q1 2024. These are all potential bullish catalysts for equity markets as well. All right, then let's just round off with Germany 40. All right, I think the last request was for Germany 40, which tracks the DAX future, so let's just cover that, and then if there's time, okay, I'll try and do oil. Hi Fabio. I'll try and quickly do oil after this. There's quite a few requests today. That's great. It's always good to see your requests come in, but I'll try and cover oil after this, and perhaps if there's time I'll try and do pound franc as well. Alright, okay, noted on your feedback as well, Chris. Alright, okay, so similarly to the other US indices, the DAX or Germany 40, which is the instrument that's tracking the DAX futures, is also trading close to the all-time highs here, right? When we look at it on the monthly time frame. So now let's just switch back to the daily. So clearly, taking the body of the candle, we have identified 16,900 as the first resistance here, right? And we've identified the second resistance at 17,071 by using a Fibonacci retrace extension tool. So extension level. So this extension level is found by using the Fibonacci retracement tool, starting from here, this swing high on the 31st of July, ending with the swing low here on 27th of October. So we're using the 127% Fibonacci extension level to help us identify the second resistance. Similarly, for the first support at 16,480, right, we see price making a very significant swing high resistance here on 31st of July, and of course then price broke above this quite easily, but it found support here on 4th of Jan as well, so to create this overlap level here. So that is why we've identified the first major support at 16,480, which is also a level that aligns quite close to the 23.6% Fibonacci retracement as well. Right, similarly for the second support, we see price running into resistance here on 11th of August, 31st of August, you can argue here as well. 15th September price came very close to this level before retreating, and also retreating slightly here at the end of November as well, right? So this is a level that was functioning as a pretty decent pullback resistance level, which now, of course, with price breaking above it, could potentially function as the support level 16,066, which is also a level that aligns very well with the 38.2% Fibonacci retracement. Alright, okay, so do take note. Of course, similarly, like the US indices, we will also have earnings data coming out of Germany as well. So should we see strong earnings results for Q4 and strong forward guidance for Q1 2024, we may see the European indices being propped up as well. All right, okay, let's go on to oil. So we're going to be looking at WTI oil futures here, right? So since the beginning of October last year, so for over about 3.5 months, right, we can see crude prices, but specifically WTI oil, trading in a very strong bearish channel here, right? We can see price has tested the upper trend line of this bearish channel here on 20th of October, coming quite close to the upper trend line again on 26th December, and of course testing this level last week as well, right? So you can see several times where price has tested the upper trend line of this bearish channel but has failed to break above it convincingly, right? We do have this wick here, but we have yet to see a WTI oil break convincingly break above this upper trend line. So for now the trend is still to the downside, so do take note. The trend for or the bias for WTI oil is still to the downside, but because of ongoing geopolitical tensions in the region, right, in the Middle East and in the Red Sea as well, right, all this potential all the current situation does create strong spikes for crude oil prices, so do take note of that. Any further escalation in this region is a potential catalyst for crude prices to spike higher, so do take note of that. Although we can see that it's trading in a strong downturn or bearish channel here, but because of the current ongoing situation, there are strong catalysts, strong bullish catalysts for oil to spike higher, right? Especially with any escalation in the region that could potentially disrupt production facilities or disrupt supply moving through the Red Sea, right? It's a key sea passage for transport of crude oil out of that region. So do take note how any potential conflicts or escalation of conflicts in that region could potentially push crude prices higher. All right, okay, but otherwise we do see trading in a strong bearish channel, especially with the upper trend line, right? Price has reacted off this trend line about 3 times. So do take note of that. Okay, so first resistance here is at 75.37, right? We can see price running into resistance several times here towards the end of December, then of course as last week as well. Okay, second resistance here is this overlap level here, right? We see price making a pretty strong bounce here on 23rd of August last year, and then when price finally broke underneath it, finding resistance here on 14th November, 21st November, and again on 30th November, creating a strong overlap level. That's why we've identified 78.43 as the second resistance, which is also a level that aligns very well with the 38.2% Fibonacci retracement, right? So we see this retracement level align very well. So we started this retracement here from 28th of September, ending with the swing low here on 13th of December. All right. To the support side, we can see price bouncing off $70.50 roughly, right? A couple of times and early of this year, right? We see price bouncing off this level, so hence we've identified that as the first support. Second support is 67.28. When we zoom out a little bit, we can see that this is like a multi swing low support here, right? Price bouncing off this level on 5th of May, 31st of May, 14th of June, 23rd, 25th June as well. So several times bouncing off this level quite cleanly. Of course, we do have this wick protruding below this level, but otherwise we can see how 67.28 has indeed functioned as a strong pullback support. All right, okay, I think we do have time for the pound. There's a last request, right? Yes, pound franc. All right, let's squeeze this one in. All right, we'll end up today's session by looking at pound franc. So British pound, Swiss franc. All right, so right, I'm on a daily time frame here, so we can see I guess for most parts of 2023, right, we can sort of argue, while when looking on a higher time frame, we can see that pound franc was pretty much ranging between 1.11 and 1.14, right? Just roughly you can see it was ranging over this level here, but towards the end, especially during the last quarter, it broke underneath this. This was previously a strong support level, right? This was previously a strong support level here, right? Okay, so right, so since the end of December, we see pound franc rising quite strongly. Maybe this is just part of a retracement move to the upside, because we do see that this is a pretty significant, oops, hang on, perhaps, I'm just trying to see if there's any descending trend line here. Perhaps there is. Just trying to see, yeah, on the longer term, where there could be any potential resistance as well, or descending trend lines. All right, okay. All right, for support, I think it's quite clear that this swing low that occurred around here, right, at about 1.07. Of course, the bottom of the wick going down to about 1.6, but first support would be around here with the swing low here, resist. And what about the next support? Okay, we do see another strong swing low here as well, so probably the second support would be at 1.0614, right? We can see price clearly making a very strong swing low over here on 26th of September 2022, right? A very strong bounce here, right? So we can use that level to help us identify the second support. All right, first resistance, right, perhaps we can use this level here. Was previously like a pullback support level here, right? Price bouncing off this level several times in November. So this was previously a pullback support level, which now could potentially function as a pullback resistance. So we'll identify that as our first resistance here, because we don't really see anything else that we could potentially use. We can also try and use a Fibonacci retracement, right? We'll start this retracement here from this swing high on 28th November down to the swing low here on the 28th. Let's pull up all the fibs, right? Yeah, we can probably keep 50 and 61 for now, right? Perhaps I would use the 50% here just as a intermediate resistance, because there's no other significant level. You just only have the fib level here. So perhaps I would like to just identify it as intermediate resistance at 1.0898, and where we would see potential resistance here would be the intersection, of course, with the 61.8% Fibonacci retracement, the pullback resistance level at 1.0990, as well as this descending trend line as well. So this is where we could see potential major significant resistance for pound franc to the upside. And for the second resistance would simply be this pullback level here, right? Price bouncing off this level on 6th of November as well as on 30th of November. All right, okay. So right, so just before we round off, do take note, these are the key levels for the dollar index, right? So once again, it has broken out of this bearish channel. Price is trading above the upper trend line, but it has consolidated. When we zoom in, it has consolidated for most parts of this year, for the first two trading weeks of this year, between 102.14 and 102.62. All right, okay, thanks everyone for tuning in. Yes, all right, Eric, I've taken note of your feedback as well. We'll try and see when the next Fibonacci series is coming up for IC markets. All right, okay, thank you everyone for tuning in today, and do look out for the rest of the webinars brought to you by IC markets for this week as well. All right, take care, have a great trading week, and I'll see you at various points for the rest of this week as well. All right, thanks everyone, have a great day, and yeah, wish you all the best in your trading journey. All right, thank you everyone.